Right. Now we are discussing goodwill claims in valuation. Now goodwill, what is goodwill? That itself is a fundamental debate. So in the olden days, we were always taught that goodwill means super profit. If a particular business is able to make the super profit, then that amount can be called as a goodwill. So take past 3 years profits and compare them with the profits of the general industry. Whatever is the excess is your goodwill valuation. Now the question is getting changed with the new accounting standards coming into the picture. They say that in an acquisition, if you pay something more than the value of the fair value of the business which you are acquiring, the surplus is goodwill. Now there again there are debates. If the super profits were achieved because of the brand or because of the customer relation, now we are saying that they are going to be separate issues. So how do you make the goodwill claims in the valuation? People make fantastic claims of goodwill in the valuation. And then they say, for example, suppose somebody is selling a flat. Now he tells a very high price from the beginning. Yesterday I met somebody, I checked the value of that flat, the normal market price is going on at 45 or 50. He said, I want to sell at 85 lakhs. Now what? If he doesn't want to sell below 85, what can you do? So value lies in the eyes of beholder, and someday some valuer will come and capture it. So there is something called as a next fool's theory. Next fool, how much goodwill he is going to give in terms of the additional valuation. For example, if I am a cricket fan and if I am getting the Virat Kohli's bat signed by him, I am bound to pay him higher value. And I may end up in finding another bigger fan who may pay even more than that for it. So is that the goodwill? Is that the premium value? Yes, goodwill is such kind of a vague concept. Now, if I want to share that in case of mergers acquisition, I am calculating the goodwill value by way of expanding the concept and coming to saying that fair value of investment plus fair value of non-controlling interest less fair value of net asset is goodwill. Now, if we are saying that fair value of net assets, you might increase the value of property. You might see in the balance sheet that there are many intangible assets not there at all. Supplier relation, customer relation, website, web mapping, Google Map softwares, other softwares, digital marketing efforts, royalties, patent, trademark, copyrights, 94 types of intangible assets I have discussed at one time. Then loyalty of customers, then spectrum, then mining rights, leasing rights, flying rights, landing rights, irrigation rights, you name it. So therefore I wrote one more article called Pancha Mahabhuta Intangible Assets. What are the Pancha Mahabhutas? Air, water, energy, earth and sky. Now, from each of them, you can derive many intangible assets. So, for example, FSI, Floor Space Index. Many of the world over, I told my friend in USA, he didn't know what is FSI. Then I told my friend in Nanded, he didn't know, he said, this seems to be a Mumbai special word. I said, yes, this is a Mumbai special word. Then UDR, Urban Development Rights. TDR, Tenancy Development Rights. Or Transfer of Development Rights. Now, all these intangible assets now have started affecting what is known as goodwill. So, the goodwills have started getting reduced. Goodwill amounts are started getting thinned. Goodwill amounts are getting restricted to a certain area. So, as of now, the goodwill as thought in the financial reporting standard, according to me, covers three things which should be considered in the valuation. One, synergy benefits. Synergy benefits can come up only when two companies work as a consolidated. If they are to work separately, that benefit won't be there. Okay. So that is synergy benefit. Second, control premium. You want to control the management of the company. So you are acquiring, say, shares more than 50% and take over the decision making power. You pay premium for that. If you have to pay less than 50%, you might get it in the market at a cheaper price. But the moment you say I want to go above 50%, it comes as a control premium. So one is control premium, one is synergy benefit, and third is something like sort of a extra amount paid in order to create an attraction for the acquiree to sell. Now, valuation is not a perfect science. In fact, Ashwath Damodaran says it is a craft. He says it is a craft. So, what value you should buy something is depends upon case to case. So, for example, I know case of a valuation of a company which had 4 crore losses annually, and the company was acquired by one telecom company at 11 crore rupees. As an accountant, at one time, we were laughing, how can you buy it at 11 crores? So then I went into the depth, and then I found that he had 250 customers who can be approached, and this mobile company sold their own mobiles to these 250 companies, and they already recovered the whole 11 crore cost in 1 year itself. So now what is the goodwill? I mean, we have already recovered the money in 1 year itself. Have we paid really any excessive money? Yes or no? Now, are we going to see at a goodwill from that fellow's angle or from my angle? If synergy benefit you keep aside, from that fellow's angle, even 5-6 crores valuation was more than enough. So the goodwill was 5 to 6 crores. So goodwill claims are very vague claims, but control premium and synergy benefits. So every SME entrepreneur, every businessman, every startup, every bigger company, when they go in for the valuation, or when they go in for merger acquisition, or when they going for tie-ups, or when they going for joint ventures, or when they do amalgamations, they have to look at two things. One is control premium and second is synergy benefit. If these two things can be sensibly valued, every businessman, if he is an acquirer, he will be able to encash those control premium as well as synergy benefits. And on the other hand, if you are an acquiree, you will be able to compute them in the valuation perfectly, as perfect as possible. There is no perfection, as best as possible, and negotiate and use that with the acquirer. In fact, whenever we go to any client, first of all, I sit in the entrepreneur's cabin and I look at all the awards he has got. And I say that, how much of these awards you have encashed? So he says, what do you mean by encashing award? This trophy I may purchase in the market for 1,000 rupees. I said, no, look, this trophy has created a great image in my mind. Similar way, the customers would have got the image created and therefore you got some of the orders. That is the value of this trophy. Have you considered it? Then I saw a frame. They have got an award from Export Promotion Council. I said, what is the benefit of this? He said, now I can sell in Canada. I said, how much business in Canada you got? He said, so many rupees or so much amount. I said, then the present value of that is your valuation. Now this is your nothing but goodwill. Now you want to call it a brand, you want to call it awards, different issue. But calculating intangible asset and separating them which can be identified separately and others which will be getting clubbed with goodwill because they are control premiums or their synergy benefits. Therefore, the goodwill claims on valuation should be necessarily, while they cannot be separately laid out, effort should be made that what falls in that is possible to be measured as much as possible. Give it a breakup for that, and that will bring you to the right way of arising out of the goodwill claims on valuation.